Hello. Welcome to this video. Tackling Nasdaq 100. So let's just get straight to it. Now, Nasdaq 100, as we all know, it consists of American stocks, right? American top stocks in terms of the 100 now American top stocks. So we can see that all the way from 2015 the market has been on a rise, light drops, rise, big drops, rise, big drops. So we're likely to continue in that pathway where the stock market of America is actually improving very well, where the Nasdaq 100 is actually improving very well, where people it's going well for the American economy. Well, on paper, as it is concerned, though things that are on paper are translated down to the actual things that are happening on the ground. Well, not so many times, but anyways, we don't want to get into that. So we're looking at the Nasdaq 100, and I'm going to be sharing on the technical aspects of this, why this is happening and what's to happen next. Now, looking at the 1 month time frame, we can see that there is uh, a bullish momentum. There's a bullish, sorry, there's a bullish trend. As you can see, there's a bullish trend, meaning that the market is making higher highs and going all the way up, right? So we are likely to see that the market might pull, just keeps going up and up and up and up and up and up, right? So that's what we might see in terms of the stock market is concerned, right? So looking at that, we are also going to see where we are likely to buy. Is it the best time to buy right now? Is it the worst time to buy right now? When is the best time to buy, and how should we buy? Now, if we're going to look at that, we are going to need to look at the overall trend of the market, which is an uptrend, right? So we're going to need to look at key areas in which in the past the market has been reversing in. Whenever there's a big drop, then there's a rise, then there's a big drop, then there's a rise, then there's a big drop, then there's a rise. So we need to see where the market has been reversing it. So we shall look at coming from this end, because we can see that there's a rise after this and there's a drop, right? So the last drop that had happened was over here. Like significant drop, you could say, was over here, and then over here, then over here, and the market started rallying all the way up. Now we take that area here, we put our Fibonacci retracement, it reversed right at almost at the 50% retracement area, right? And then we take the same fib, we put it right over here in this area, and we see that the market reversed in the 78.6 area. And then we take this low, now we use this low because that was the previous low that where the market had reversed, and we place it on this high, the 61.8. Now we take this one and then we put it right here on this high. Now the market reversed on the 50%, but though it's not yet through, it's not yet done, so we don't know whether exactly until the market breaks above over here, right? So what I'm anticipating is that the market could come to this area or even this area over here, right? Because the tariffs ain't over yet. The trade war is not yet over unless a negotiation comes by and something is unveiled. So I'm marking those key areas right over here and right over here, but still was a good buy over here because that's where most institutions are going to be buying at the 50%, where when everyone is going out of the market, when everyone is becoming fearful, that's when we become greedy, right? That's when we are supposed to apply greed. The greed is not good, but anyways, that's when we apply greed. And it's the same thing that has been happening over time. So if you take those lows and those highs, same thing on a weekly time frame as well. So I just gonna scale it down to an H4 time frame so that we can see a bigger picture, a clearer picture. Now, as we can see on an H4 time frame, we're still in a downward spiral going all the way down. So we haven't yet broken the previous high, so as we can see that we're actually changing a trend. So which one is the previous high? This is the previous high right over here, right? So this is the last high that transpired before there was all those drops, right? Then this is the last low where we actually reversed, which was the 50% mark, and this is a 60.1% mark in our Fibonacci retracement. So we might likely see the market coming all the way up to here, and heading all the way down, coming here, heading all the way down until we can take a high out and we see that we're actually heading all the way up now, right? So until we can take out that high, which will be this high, then we will see that the market is actually trying to go back up due to different reasons. Of course, the market is pushed by political and economical decisions that these presidents make at the end of the day, that Trump will make, that China will make, so that's what will determine whether the market is going to go up or go down in terms of the policies that are being placed in the White House or by the Congress or whatever. But it's mainly fundamental. That's what is moving all these markets all the way to the downward side or to the upside, right? So that's what moves the market in general. It's fundamentals, right? We may apply our technical analysis because we have patterns that keep on playing out over time, and over time they play out very well, that we have a trading edge in terms of the technical part of it. But mostly markets are moved by fundamentals, right? Fundamental is what moves the market towards the upside or towards the downside or towards the sideways or whatever side that the market wants to move, but it's only up, down, and sideways. So that's what transpires in terms of the global market. So now let's just take a look at US 30. Let's just take a look at US 30. I don't think I have US 30 with me here. No, I don't have US 30 here, but well, let's just type it in right there. US 30, which is the Dow Jones. Dow Jones. Now, I like Pepperstone better. As you can see, these are the industrial companies of America. Let's look at the bigger time frame so we can remove all those things that are transpiring out there. So this is the Dow Jones. As you can see, it's playing out clearly. It's an uptrend. It goes down, it goes up, it goes down, it goes up, it goes down, it goes up, it goes down. So that's the movement that it actually does. So even if we place our fib from here to there, it's at the 50% retracement level, and then you place your fib from there to there, close to the 50%, right there. Can you see 38, but close to the 50%? So we might likely see the market bouncing back up, but we'll still wait for it and see how it actually pans out, how it actually goes at the end of the day, because that's what we need to see. And if it does go up, then right at the break over here, you can still buy, but that'll be risky because you'll be buying high, so you'd want to buy low. So you just wait for it to get to the 61.8 retracement mark, and then from there you can start buying from there. And you can even see the stock market today, it's kind of green. It's kind of, everybody is kind of having a good day at Wall Street. Everybody is just probably shouting at the top of their voices. Tesla up for 5.28%, Nvidia up 6.88%, Apple up 3%, Google 3%, and all these finance, these banks, JP Morgan, as you can see, they're going all the way up, and Amazon. So we might see that tomorrow. Maybe it might be a bloodbath, might be red, and yeah, that's what we're going to be looking at, and that's what I was just coming to inform you of. So just get ready to buy it anytime. It's still time, and it's going to be a beautiful, beautiful ride in 2025. There's more success to be seen. Ciao.